What's up, everybody? Welcome back to another video. Today we're talking about Google stock. They reported earnings on February 4th, and pretty much ever since then, the stock has been going down almost every day. It's not been good since their earnings report. So today I want to talk about what actually happened in their earnings, why the stock has been going down, and what I'm paying attention to going forward with Google stock. I do personally have a small position in Google, and if we pull up my portfolio here, we can see that I have 18 shares of Google at $103 average price. So I'm up around 80% in the stock. So it's in my portfolio, and it's safe to say that it's a stock that I pay attention to. If you're new here, my name is Sheldon, and I've been investing for over 5 years now, and I make completely transparent videos talking about how I invest in the market. And I am not some self-proclaimed expert. I'm not a guru. I'm just some guy who likes to share my experience and what I've learned along the way. So if that sounds interesting to you, if you want to learn about the market and stay updated on stocks, then subscribe to the channel and let's go on this crazy journey of investing together. So let's dive right into it, and I want to start by giving a little bit of a snapshot of where Google stock is trading. Obviously, they hit a high of around 208.70, and ever since they reported earnings, the stock has been going down a lot. If we look at it on a one-year basis, they're up 32% on a year, so that's pretty good, to be honest. And they also had a bit of a dip starting in July that went all the way down into about mid-September. And I believe this was a dip that was mainly fueled by like government regulation fears. Again, it really nothing that actually mattered or was important to the fundamentals of the company was fueled by that dip. And I was actually buying a little bit of Google stock during that dip. And so then it kind of went up again, and now we're back down on earnings. It pulled back. So it's currently sitting at a $2.25 trillion company. Trailing 12-month revenue is $350 billion. Net income was $100 billion. The PE ratio on Google is crazy right now. This is by far, in my opinion, at least the cheapest Mag 7 stock, and we'll get into that further in the video. But it's trading at a 23 PE ratio. That is very impressive for a technology company like Google. And if we look at their price to sales ratio, they're trading at 6. So it's looking like a pretty good deal, but the stock has been going down in the last couple weeks here. And so what has been fueling this main dip? Why has the stock been going down? And if you're doing a lot of research and if you're kind of out there Googling it, the main things that you're going to see is that Alphabet stock tumbles after a miss in cloud revenue and increased capital expenditure spending, so spending growth. So I want to talk about each of these individually, and we can start by talking about the increase in CapEx, because I think it's actually a good thing that they're spending a lot and increasing their investment into AI and data centers and things like that. But you can see here that the company has also dramatically expanded its capital expenditures for the year ahead from $57.9 billion to a planned $75 billion. And I'm going to be honest, I don't understand why this could really be a bad thing. I guess I do understand why it could be a bad thing if you have a shorter time horizon, but if you're someone like me and you're investing in Google stock for like over 5 years in the future, honestly, increase in CapEx, that's what you want to see. That's what I like to see. And if we compare that with some of the other big companies right now, let's look at Microsoft, for example, okay? Microsoft CEO Nadella just reaffirmed his plans to spend $80 billion on AI and data centers in 2025. For reference, the company had around $50 billion in total CapEx in 2024. So, I mean, if Google's doing it, Microsoft is doing it. How about we look at Meta, because Meta, spoiler, they're also doing it. We anticipate a full year 2025 capital expenditure will be in the range of 60 to 65 billion. So, I mean, all of these big tech Mag 7 companies are coming out and making absolutely historic investments in AI and data centers going into 2025, right? This is something we knew. It's honestly, I don't understand why a lot of people negatively reacted to when Google upped their CapEx for the next upcoming year, because all of the other big companies have numbers that are even bigger. Like Microsoft said $80 billion. Uh, Google only said 70, which, you know, or 75, I mean, sorry. So I look at that as somebody that has a long-term time horizon as a Google shareholder, and I think that's a good thing. It would be hard to see some of like the ROI on that investment if you plan on getting out of the stock in the next, you know, couple years. But I plan on holding Google for like minimum 5 more years, right? If not more. And that's more than enough time to start to see a return on this $75 billion investment. So from my perspective, that's a good thing. The next one is a little bit more interesting, I'd say. But they missed Google Cloud revenue expectations. And I believe right here, Google Cloud revenue hits $11.9 billion in revenue, falling short of a $12.1 billion Wall Street anticipated, revenue. So big whoop. They they fell short of Wall Street anticipated revenue by $200 billion. Are you crazy? Are you for real? Like, how is that at all? Those two things is what sent the stock price down, like more than 10%. At least that's what a lot of the research that I've done has been leading me to. And if we look at the market cap of Alphabet in the last, like, let's just look at the last month since February 4th, the market cap of Google was 2.5 trillion, and now it's trading at 2.25 trillion. So roughly, when you think of it this way, it's kind of crazy because they missed revenue by $200 million in their cloud segment, but the market cap of Google as a result of that miss went down $250 billion. So, I mean, you can say that's a little bit of an overreaction and a little bit of just selling pressure that got put on the stock. You know, is what it is. As a shareholder, I don't care about these short-term moves, right? We're long-term investors here. That's what we talk about in these videos. But it's just very interesting to see that a $200 million miss can result in a $250 billion market cap reduction because it just leads to selling pressure and funds even start to pull out of the stock, right? And one thing that we could touch on, at least with this cloud revenue, is that if we compare it to AWS, and AWS is the biggest cloud provider in the world, I believe. Like, they have the biggest cloud platform, some of the most built-out services. But they're reported recently that they had $28.8 billion in revenue from their AWS segment. So obviously they're killing Google. They're more than doubling their quarterly revenue in their cloud segment. But if you look, their sales increased 19% year over year. And I believe the year-over-year cloud segment for Google, yeah, right here you can see is a 30% increase. Get out of here. So even though the Google total revenue is less than half of what AWS is, their segment's actually growing faster than AWS. So again, when you look at the reason for a lot of the selling in the stock was a miss in Google Cloud revenue, when you look at it just a little bit further than just that surface level, you can start to see that, like, really nothing that bad is going on, and the fundamentals are actually very strong, and it's growing at a higher rate than competitors. And spending growth is on par with also its competitors, and it's looked at as a good thing if you have a further out time horizon. So it's just like these short-term things, right? If we go back to just the stock chart, if you have a longer term mindset, and if you're looking at these stocks on the short term, then I could see why you might be freaking out. But you got to have the long-term mindset and hold for the long term, and that means looking at the fundamentals. So that means looking at what actually matters. And then if the fundamentals actually start to crack, and if the fundamentals start to go, like if you have a bullish thesis on the stock and the fundamentals start to stray away from what your original bullish thesis is, then maybe you could sell a stock. But Google, let's look at the fundamentals, shall we? Let's dive into their earnings report. So this is their recent Q4 of last year earnings report. They released it on February 4th. Obviously, I'm a little bit late. Like, it is February 19th when I'm recording this, but you know, like, we're not getting another earnings report for a while. So we can see that Q4 revenue increased 12% year over year to $96.5 billion, which I'm not sure if that was a record quarter. Let's take a quick look. It's looking like it was a record quarter. So shout out to Google and congratulations. Can't complain about a record revenue quarter. And yet the stock gets shot down because people freak out over nothing. So we had good revenue. Google services revenue increased to $84 billion. Google Cloud revenue to increased 30% year over year to $12 billion. EPS increased 31% to 2.15. So if we look, honestly, sounds like a pretty good earnings report to me, right? Like if we look, most things are green, if not everything. Revenue year over year growth. This is their income statement. So EPS is 30% growth from, I believe it would be this quarter over here. So EPS is growing nicely. The fundamentals of Google are just so solid. It's ridiculous. And then obviously we expect approximately $75 billion in CapEx for 2025, that's a number that I really like to hear, especially when you look at all of the other competitors, right? And then one thing that is interesting, and one thing that I think you should know if you're buying Google stock, right, is like if you look at their revenue breakdown, obviously they make the most money from advertising. It's an advertising company. Google has an audience, right? It's YouTube, Google search. They have billions of people that use these platforms each day, and they make money by allowing people to send targeted advertising to that audience, right? That's how they make money. That's how Meta makes money. And you can see that it's not all of their revenue. It's a large portion of it. And if we look at, this is just the quarter end, but of the $96 billion that they made in total revenues from the quarter, $72 billion of that was directly from advertising. So obviously they make a lot of their money from advertising. Like the far majority of it is advertising, and it's like Meta. Meta has, I think, like this isn't 90% of their revenue. Like Meta has around 98% of their revenue that's just from advertising revenue, which is crazy. Obviously Google has Google services, Google Cloud, and a small other bets line item here, or Google subscriptions and platforms and devices. Like they sell some hardware, not Google services, but that's the total. So it's just interesting to know, and it's a good thing to know that Google does have a large portion of their revenue coming from advertising specifically, because, that is a bit of a risk. If anything ever really changed and really impacted the digital marketing and the digital marketing landscape, then that is a risk factor for Google. So to recap that, basically what I'm seeing in Google stock right now is they reported earnings. They had a very, very small miss when it comes to cloud revenue growth. They also increased their CapEx, which some people thought was bad, and depending on what type of investor you are, you could see that as bad, but I think it's good, and for a majority of the people watching this video, it's probably a good thing. So that sent the stock price down a little bit, into a little bit of a correction. But as a fundamental level, the company is doing fine. Like if you dive into their financials and you dive into their earnings report, everything is up on a year-over-year basis. Everything's actually crushing it. They're a profitable company, but earnings per share has continued to grow. Free cash flow has continued to grow. They pay a very small dividend. Like it's not a huge dividend, nothing to get too excited about if you're a dividend investor, but 0.43% dividend is, I'll take it being a Google shareholder. I own the stock for capital gains. I don't necessarily own it to get dividend income, right? But one thing that I want to talk about is the valuation on this thing. Like the valuation on Google is crazy right now. Like it's so cheap. I think it's at least in terms of their price to earnings and their price to sales, right? And when you compare it to the other Mag 7 stocks, like if we look at PE ratio of Google is 23. I think the average price to earnings ratio of the S&P 500 right now is 27. And I can pull that up. Give me 1 second. So if we look at the S&P 500, the average PE ratio is 27.4. And Alphabet is trading at a lower value than that. If we compare it to Amazon, Amazon's PE is 40, Meta's PE is 29. So from a valuation standpoint, Google doesn't look like that bad of an investment, especially when you compare it to its competitors. This is not investment advice. Don't go buy the stock just because I'm telling you that it looks like not a bad deal right now. You got to do your own due diligence as an investor, and if you ever want to actually be a successful if you want to be successful long-term in the market, then you have to learn how to do your research and do your process and do your due diligence on your own. So I don't know, quick disclaimer there. But if we also look at a couple other things that Google has been doing, so obviously they've dipped a toe into quantum computing, I guess you could say, and meet Willow, our state-of-the-art quantum chip. So obviously Jensen Huang, who's the CEO of NVIDIA, has come out and said that realistically quantum computing is not coming out for it's not going to be a viable thing that people do for decades even. And I believe Jensen Huang on that one, okay? He would know, basically. But Google is putting a bit of money and a bit of R&D into that direction, which, I like to see that. I'm not going to complain as a long-term shareholder that they're investing in quantum computing and AI and data centers. I think it's a good thing that they have this project on the go. And it's something that, I'll continue to stay updated with. I am by no means a quantum computing expert. I know that it revolves around something called qubits, I think is what they call it. And I think a qubit is like the quantum equivalent of a transistor of your normal computer chips. So I don't really know a lot about quantum computing, to be honest, but I know that it's, definitely an innovative technology. And I think it's revolves around the fact of energy and efficiency density when it comes to computer chips and being able to process more with a smaller processor, basically at an extremely high level. That is what I think it revolves around. So Google is somebody that puts a little bit of investment into that. They also have AI. And Google has taken a little bit of heat for their AI lagging, and they've had a couple releases of AI that didn't go incredibly to plan, right, in the past. But there's this cool thing called the AI, the chatbot arena, And basically, this is where people go to compare models, and basically it takes away the whole marketing aspect of the model, and you can just compare two models completely anonymously. So you provide a prompt and then you get two results from two separate models, but you don't know what the model is, so you can't have a bias as to I like Meta's model more, I like Google's model more, I like XAI's model more. It's completely anonymous. You don't know which model's better. And if we look at the leaderboards of this arena battle, obviously, Grok 3 is first. XAI is gonna... It's not surprising. This thing just got released on Monday, I think it was, and it's already at the top of these leaderboards. But Google has Gemini right there, right after Grok 3 in arena score. So from, people have been hating on a lot of Google's artificial intelligence. When you look at it on an anonymous basis, it seems to be a model that produces some of the best results. So this is just an interesting thing to look at and pay attention to if you're a nerd, I guess, like myself, because it's a performance benchmark, basically, and Gemini has been doing good, and that's Google's AI. And this is before that they put, $75 billion into AI and data center, investment. That's before that. So there's lots to be excited about in terms of Google stock. I'm not telling anybody to buy it, but it is a dip. Personally, I don't think I'm going to be buying up this dip at all. Not to say that I don't think it's not a good buy right now, but I have been building up a bit of a cash position in my portfolio, right? I've got around 5,000 in cash. But honestly, I just want to keep that cash around and wait for some opportunities. I don't necessarily want to throw money into another AI play right now, just because if we look at my portfolio, Palantir is obviously an AI play, Meta, AI play, Apple, obviously they all do different things as well, but If I was to allocate more money to Google, I would just be a little bit hesitant to do that, and I would like to maybe put money into something else first. But it all depends on where your portfolio is at. Like if you're looking for a digital advertising, big tech giant, Mag 7 AI play right now, and you don't have one, or if you're looking to add another one into your portfolio, I would say Google is a good stock to buy right now. If you have a long-term time horizon, right? Obviously, that's a given. We're long-term investors here. But anyway, that's pretty much what I wanted to talk about in terms of Google. Let me know if there's anything that you know about Google that I didn't mention in this video, or if you have an opinion on Google, or if you own or have a position in the stock. I'd love to hear what your thoughts are. As always, I wish you guys the best of luck on your investment journey. Peace.